Meanwhile, the other part of the Trump agenda has really begun to take off, and it's off to the races. Challenger and Gray this morning announcing job cuts soared 245%. We're talking 172,000, of which 62,000 from the government. My next guest says these DOGE cuts are necessary. I want to bring in now Kobeissi letter editor-in-chief Adam Kobeissi. And Adam, so explain why, in your mind, streamlining our government actually is a positive.
Look, I mean, I think right now, for the last, basically as long as we can remember, deficit spending has been an issue. It's accelerated now. It's definitely worse than it was really at any point in history since, other than the pandemic. And we've tried the other side of this, which is raising revenue. You can't raise revenue enough. You have to cut spending. And I think right now you're finally starting to see some spending cuts. Obviously, there's a long way to go. But you mentioned that Challenger Gray data this morning. This is a crazy statistic that U.S. government job cuts were up 41,000% year over year. Last year, from January 1st to right now, March to the beginning of March, we only saw 150 job cuts in the U.S. government. This year, there was 65,000. So I think you're starting to see the beginning of something big, but there's also a long way to go.
You know, when people have what they perceive to be lifetime employment, often they don't work as hard, right? That's part of the efficiency argument. And then there's, of course, where they work. A lot of these agencies just aren't necessary or have things that don't align with our values. So let's shift to the markets for a moment. Listen, it's a tough time. I know your phone is ringing off the hook like everyone else's. What are you telling clients?
Look, I think this market has actually been an exceptional market for traders. I think if you're really focused on the more short term, we've been kind of selling into the strength, buying into the weakness, and especially on these intraday moves where you're seeing very heavy one-sided moves on an hour or 2 hour basis, and then a headline comes out and it reverses. I think there's a lot of opportunity to trade over the short run. Now, if you look longer out, we're not really seeing market conditions that are conducive of a prolonged bear market or a major crash. I think, look, right now we're down 5% from the all-time high in S&P 500. Sentiment is as if we're down 20 or 30%. Right. And some of these tech stocks are, like NVIDIA down 30% from its all-time high, Tesla down 40%. A lot of stocks are down pretty significantly. I think a lot of this is emotional. I think markets have priced in a lot of the bad news. So long term, I really do think we are starting to see some bargains here. We are buying into the strength. But over the short term, it's a very tradable market, especially if you're trading based on technicals. And we've had a great last few weeks.
Yeah, I just got 10 seconds left. But I think the thing, and maybe you'd agree, is if you haven't sold a great stock and is down a lot, it'd be crazy to take a loss at this point, wouldn't it?
Yeah, I think you look a lot of these stocks, and you look at some of these big tech names. Some of them were getting cheaper as they went up on a forward multiple basis. Right. Now they're looking even cheaper than they were before. Right. I think if you have capital on the sidelines or you're in a quality name, start looking to deploy some capital over the long term and over the short term. Just don't follow the headlines.
Adam, my man, appreciate you.